We're diving right into a detailed analysis report on Rocket Lab's recent parabolic move. It's looking at the catalyst behind that, roughly 21% gain?
And the report makes a strong case. It completely nails the factual data. The closing price of $70.52, breaking those key 60-65 resistance levels.
The command of the facts here is excellent.
Absolutely. That foundation is totally robust, which is great. It gives us a really solid base to work from. So let's get straight into how we can maximize its impact, especially for a more institutional reader.
Okay, so let's start with that overall presentation, the language used to describe the move.
The report's current style successfully generates excitement and urgency, but risks sacrificing long-term analytical credibility, particularly when discussing risk mitigation.
I see that tension. The submission uses really high-energy, urgent language. We're seeing words like parabolic, exploded, even references to FOMO.
Right.
And that builds a powerfully bullish story, for sure. But for an analysis report that's aiming at a sophisticated audience, it could clash with the objective rigor that the rest of the report provides.
Exactly. And if you look at the technical section, the report itself notes high institutional volumes driving this. Well, institutional confidence and retail urgency they operate on very different frequencies.
That's a good point.
So if we're trying to align the report with how sophisticated funds think, we should probably calibrate the language to reflect more strategic confidence. Technical inevitability, even, not just that raw emotional urgency.
So the goal is to boost the perceived rigor without losing the bullish conviction.
Precisely. We want to keep the excitement, but ground it in a different source.
Okay, but I have to ask, for a market analysis about such a huge, fast move, isn't that sense of urgency what grabs the reader in the first place? If we take out the parabolic feel entirely, do we risk it sounding a little too academic?
That is the crucial balance. You're right. We don't want to kill the urgency. We want to reframe it. The urgency shouldn't come from a fear of missing out. It should come from the technical setup that forced the move to happen.
Ah, okay.
We want the reader to feel smart for understanding the mechanics, not just anxious about catching the wave.
So we want to sound less like the people reacting to the news and more like the people who understood why the short squeeze had to happen.
Exactly. That's the shift. So let's think about some concrete ways to do that. When talking about the breakout, instead of focusing on the emotional experience, if you blinked, you missed it.
Right.
We could reframe the whole narrative around that critical $60 level. We focus on how breaking above $60 wasn't just enthusiasm, it was a technical trigger. It forced bears to cover their short positions.
So you make the primary narrative device the technical mechanism itself. The short squeeze, or maybe the gamma setup.
Yes, absolutely. And just briefly explaining what that means is so powerful, even for an advanced reader. A gamma setup shows that options positioning amplified the move, forcing market makers to buy stock as the price rose. It demonstrates sophistication.
It proves it was an institutional scale event.
It does. So the suggestion is to turn that market urgency into a display of technical superiority. That gives the analysis a much longer shelf life than just that initial 21% pop.
Okay, I like that. It's a powerful shift from reporting on emotion to explaining the mechanics that force the action. Let's look at the structure next, specifically how the different catalysts were presented.
Yes, building on that point, let's move to how the overall explanation was constructed.
Okay, so a key theme here seems to be the presentation of 4 really powerful but also really different catalysts that are all cited as driving this move.
To strengthen the logical flow and increase the impact of the explanation, the material needs to clearly establish a hierarchy of causality among those 4 catalysts, rather than just presenting them as equally weighted factors.
Right. So the report lists them out. You have the scarcity realization, Rocket Lab being the only real public rival to SpaceX. Then there's the Q3 financial lag effect from that record revenue.
The big SDA contract.
The huge $816 million SDA contract, exactly. And then finally, the short squeeze above $60. And listing them all at once, while it is comprehensive, it does kind of diffuse the focus. It doesn't really answer why the move happened on that specific day.
It feels like 4 equal engines firing at once. And there's a risk there that you dilute the central thesis. We need to help the reader understand which of these was the trigger for the move.
And which were the justification, the foundational stuff that supported it.
Exactly. The recommendation would be to prioritize the catalysts that explain the immediate sudden acceleration. So that's the technical piece. The short squeeze probably paired with that scarcity realization idea.
And then you frame the Q3 revenue and that massive SDA contract as the crucial foundational evidence, the stuff that gave investors the conviction to pull the trigger on the technicals without hesitating.
The foundation made the trigger inevitable. That's the story. The Q3 numbers and the defense contract, that's the underlying value that stops this from just being a speculative pop.
Good point.
If this were just a squeeze without that fundamental backup, this analysis would read very differently a week later. The report needs to prove that connection.
But if we focus too much on the short squeeze as the main trigger, do we risk making the whole thing sound purely technical, almost diminishing the fundamental strength the report correctly identifies?
And that's exactly why the synthesis is so critical. So let's illustrate how we could do that. You could structure the argument by first establishing the solid foundation. You lay out the 48% year-over-year growth, the fact that they're now a cemented defense prime contractor.
Okay.
That step proves the lag effect. It shows the market was slow to price in this incredible Q3 value.
And once that foundation is established,
Then you show how that foundation created this spring-loaded environment where the technical breakout, the short squeeze, became the inevitable trigger. It validates the whole thesis. That kind of structure elevates the report from just a list of good things into a powerful narrative of, financial inevitability.
that definitely marries the fundamental strength to the technical action in a way that would convince a skeptic.
And speaking of fundamental strength, let's dig into the financial health, specifically the R&D discussion, which is, that's often the main bear case for these companies, right?
Right. The report makes a really strong point here, but I agree it feels a little underleveraged, especially given how important it is for the long-term story.
The report presents a powerful but underleveraged fundamental point regarding the company's operational efficiency and financial stability relative to its major development risks.
Okay, so as I'm reading it, the report correctly highlights two separate, very positive financial points. First is the 37% gross margin expansion, which is happening despite all the spending on Neutron R&D.
And second, the strong cash position, which lowers the immediate dilution risk.
Exactly. But the potential of Neutron is only really brought up later, in the long-term bull case, the $100 plus by 2026 idea. The immediate importance of that 37% margin expansion isn't fully connected to the current fundamental picture.
And this is a huge opportunity to flip a traditional bear case into a core strength, right now. For a high-growth aerospace company, the main bear argument has always been dilution risk.
Sure.
The fear that they'll have to keep issuing new shares to fund big projects like Neutron, punishing the existing shareholders.
It's that classic high-burn startup problem, where amazing tech gets overshadowed by the constant need for more capital. But the report gives us the solution, that 37% margin and the 48% growth. So how does the writer connect those dots to neutralize that dilution fear right now?
By synthesizing them. Right now, the report kind of treats the Neutron price target as a future dream and the margin expansion as just a nice quarterly number. We need to explicitly link them.
Okay.
We should suggest synthesizing the margin improvement and the cash position to show explicitly how the company is now internally funding its own long-term growth engine, Neutron, without killing efficiency.
That's critical, because that fundamentally de-risks the immediate investment thesis way more powerfully than just pointing to a price target that's years away.
Exactly. A 37% gross margin expansion while you're also ramping up R&D for a giant new rocket, that is concrete proof of operational leverage. It's proof of management execution.
It shows they can grow revenue, grow margins, and fund their future all at the same time.
Which validates the whole assessment of RKLB as a growth titan right now, not in 2026. The growth is proving to be self-sustaining.
So the argument shifts from Rocket Lab has good financials to Rocket Lab's current financials are actively neutralizing the #1 reason skeptics sell the stock. It turns a backward-looking Q3 result into a forward-looking guarantee.
Now, that is extremely actionable analysis. So we can propose creating a focused point where that 37% margin and 48% YOY growth are explicitly linked to the reduced risk of dilution. The efficiency improvement happening during the development phase is the validation. It's the evidence that separates high-risk speculation from a high-conviction investment.
That was a really powerful look at how to get the most out of that financial data.
I have to say, I really appreciate the depth the writer went into here. They clearly get the complexity and, frankly, the excitement around this company. The choice of data points, the SDA contract, the margin expansion, it shows real expertise.